Hello, everyone. So, I will be giving you guys a quick recap of the market and, talking about the US dollar. So, we had the market, you know, do exactly what we were looking for, right? So, we highlighted the sequential SMT, right, between the last quarter of the previous month and the first quarter of this month, right? So we had SMT at these lows. Then we had the S&P 500 take out the all-time high. Nasdaq hasn't done that yet, and the Dow is lagging behind. Right. The reason for this, right, why we had the S&P 500 exploding higher, along with the E-mini Nasdaq futures, and the Dow lagging behind, is due to the fact that we had failure swings in regard to the SMT divergence which happened between these three asset classes. So I've said this many times. The asset that makes the lower low will usually lag behind, right? The assets which make the higher lows, right, will explode higher. So here we had sequential SMT, the monthly cycle, sequential SMT. Then again we had sequential SMT between Wednesday and Thursday. So here we had Tuesday making the low of the week. Then we had price trade higher, which we expected. And around here we were looking for SMT to form, which it did right here. Right? So it does not have to be what would I say? A low. So there will be times when it will just be a candle due to the fact that this candle right here was the beginning of the third quarter of the weekly cycle. So there will be cases like this, whereas you'll just see price close above the opening price of the third quarter, like this. Then you'll have this one, whereas it closed below it. This is SMT as well, and it is sequential, right? Here we had price close above it, right? While wicking below this low. So this is also sequential SMT, but this is not as clear as we would like to see, like these lows right here, right? These lows were very obvious. So when price was trading here, it was very obvious that we would have a reversal. So we got what we were looking for this week, and tomorrow, I'm not 100% sure what to expect. Right, we're at all-time highs again. We don't like being at all-time highs. We like working within the range. So while price was here within this range, this was amazing to work within. While price was trading here, forming a failure swing, and the Dow was trading below this low, it was pretty easy for us to anticipate that price would go higher, especially due to the fact that we had precision swing points here. Remember this? Yes. So now we'll look at the Forex market, which I haven't done in a very long time. So right now we're looking at the monthly time frame, right? This is a large time frame. So currently we're in between two major swings, right? We're in between a swing low and a swing high, right? This area right here, which is delineated by this red vertical line and this black vertical line right here, or gray, This was the first quarter of the current quadrennial cycle, right? A quadrennial cycle is comprised of 1 year. So this would be Q1, and concurrently we're within Q2, right? Understand? So this is the true open of the quadrennial cycle, which was January 1st, 2024. We are stuck in between major pools of liquidity, and we're currently at equilibrium, right? So this is why the markets are so reluctant to give us clean price action, right? We have buy side liquidity here at around 106.952, and we have sell side liquidity at 99.099, right? Currently, if we would see price trade below this low right here, this would be very good, right? But it would probably take some time before it would even do that. Or if it would trade above this high, then we would begin to have clean market conditions, right? So currently, like looking at the higher time frame, I think that this is the ultimate drawn liquidity, this high right here. But what I'm thinking is that if price drops and either take out this or this low, right, and create a sequential SMT here, right, say one of these failed to take out a high, or even if this fails to take out all on these, take out the high, then we would be looking for a major change in sentiment, which we could just use our lower time frame cycles to get in line with, right? Which would ultimately lead us to this high. And if we take this high out during this cycle, which is a larger cycle, right? So the quadrennial cycle is just 1/4 of a larger cycle. This high and this low right here was the low of a larger cycle, which is larger than the quadrennial cycle, right? Which is comprised of 16 years, 4 years per quarter. So here we have an immense amount of liquidity, right? And also below here we have an immense amount of liquidity. Remember what I said today? I said that the yearly cycle and the quadrennial cycle, and there are cycles above that, they function very well within the Forex market. So right now we're looking at price. It's not as clear. It's not clear, right? Because we have buy side liquidity here, sell side liquidity here. If you look at the lower time frames, then you won't be seeing this. But when you zoom out, you do. So if price goes below this low on their sequential SMT, then that would trigger a move higher. If price goes above this high in their sequential SMT, they will trigger a move lower. So we're looking at the macro view of price action right now. Remember, this is the true open of the quadrennial cycle, right? Currently, we have a swing high being formed right here. We had price trade into this fair value gap into this balanced price range, right? We had SMT here, right? So we had price run above this high, but we didn't have the British pound run below this low. And this is usually a telltale sign in price action, right? And this was not sequential, but it was SMT. And why would this even mean anything, right? When you have SMT, which is not sequential, it will usually serve as low resistant liquidity after there is a higher time frame sequential SMT, right? Also, if you look at this candle right here, which is the high that I use to mark the buy side liquidity, it's an up close candle, which means that the Great British Pound should have down close candles here if, on a regular day. Here we had a down close candle, so that's good, right? That's normal. But if you look here, we have a up closed candle. This right here is a precision swing point on the higher time frame. Can you see that? So while we had SMT here, which is not sequential, the fact that we had a precision swing point, right? And the fact that this was Q4 of the previous year, we could expect lower prices, right? Which is why when price was here, I don't remember if anyone remember me talking about this, right? In regards to the dollar. So this right here is not the ultimate move, but it would, cause a pullback in price. So right now, what do we do? On the higher time frame, what do we do? We can find trades on the lower time frame. Of course, you can find scalps. Small pullbacks where we can get our 2, 3, 4 hours. But looking at the higher time frame, what do you expect? We have buy side here and here, right? So if price takes out, or there's sequential SMT here, because we're not 100% sure which one would cause it, right? So there's sequential SMT here, even if price just runs here, right, and reacts to this right here, because we have this high right here, which the Great British Pound is pretty close to. We have this wick. Also right here, we have this wick as well. But what makes me, want to see sequential SMT here is the fact that we have this precision swing point here, right? And this is internal liquidity, this fair value gap right here, which price just barely ran into. And this is also a very telltale sign that price will be gravitating back to fill this imbalance in the future, right? So we have a true open here, which is a higher time frame true open. So this is why, we're having a hard time in the Forex market. This is why the Forex market isn't clean. This is exactly why. Why? Which is why I said, the market's waiting until March. You can see that we're beginning to have expansion, right? And this would be a quote unquote order block. But to be honest, as the days go by, it's like I am starting to, believe less and less, about order blocks. Like I don't believe in them as I would when I was, when I just began. So currently I usually look for order blocks to be ran through. Like right here, you see price. I'm not going to look for this to like hold price. Right? I focus on gaps. Also, right here, you can see that this candle right here, the formation of this swing high, right? It's in this fair value gap. Whereas this swing low right here is not in this fair value gap. Do you see that? That's a cracking correlation as well. Here, you see that this swing low is within this fair value gap. Well, this balanced price range as it as the previous fair value gap to this one, right to the left of it, cut right through it. That's the balanced price range. So the euro dollar, the higher, British pound, this high will be taken out. And I am just like listen, whenever I see sequential SMT between, it doesn't matter if it goes above or below, right? That will be amazing, because then we will have a almost perfect market. We'll have a symmetrical market. We'll have a higher time frame sequential SMT, which is why price moves. That's why price turns, right? What do you wait for? You wait for a higher time frame cycle sequential SMT, right? And then you need to see a lower time frame sequential SMT form after that. Just like here. This was the monthly cycle. So this would be the perfect, this would be perfect to get in line with on the lower time frame. This is a 4-hour chart, right? So monthly cycle, sequential SMT, then what? Then you will be looking at like at least 3 cycles below that. You're just checking them, right? And once you see sequential SMT on even the weekly cycle, then you're in perfect, order flow. You'll be able to know what you're doing, right? By using this, right? And even though we're at all-time highs, and we just keep taking our all-time highs, right? The futures market is very different from the forex market, right? Which is why I posted today, right, to update you guys, give you guys, try to give you guys more clarity, because I see a lot of questions being asked. Like, why doesn't the yearly cycle work on future? Because it's not pegged to the yearly cycle, right? It's when they coded the algorithm, they made the yearly cycle for the forex market, not this market, right? The yearly cycle, the quadrennial cycle, that's for the forex market, right? The US dollar, Great British Pound, Euro USD. If we go here, right, and we look at the last previous quarter here, we had price, right, take out this low, then rally higher, then crashed at Q4. This was perfect. This was Q1, Q2, price drop below, take the stop, then rally. You're not going to see the futures market be this clear within the quadrennial cycle, right? What happens, whenever you see, in regards to the quadrennial cycle, whenever you see the dollar drop, then you will see futures rally pretty hard. Whenever you see the dollar rally, you will see the futures drop. And let me try to show you guys that right now. So here, you look at that. So the quadrennial cycle of the US dollar dictates the direction, right, of the futures contracts. Right. It's negatively, it's related. On the lower time frames, there will be times when, it doesn't look like they're related as much. But when you zoom out and you use the quadrennial cycle of the forex market or the US dollar, right, and you compare it to the futures market, then everything becomes clearer, right? So for example, right here, when was this? October. This was October 2023. We had the US dollar drop. Now, without looking at the futures market, it should rally higher. Where's October? Here. October formed the swing low, right? Where this formed the swing high. And a precision swing point, right? It dropped. This rallied. It's been rallying. It's continuing to rally while this is within a range, which is typical because price should be irrational right now because the forex market is not one-sided, right? So this could rally or go up right now, doesn't matter, right? Also, right here, look, this is in July 2023. See, July 2023, we had price drop, right? We had this rally higher, and we had price drop. So the monthly time frame, right? You can use the monthly time frame, just to relate to the quadrennial cycle. You don't typically use the quadrennial cycle to trade unless you're a stock investor, right? Unless you trade options or something, unless you trade, unless you're investing, per se. That's better to say. Unless you're investing, then that's when you would use this for action. And this information, this will help us a lot, over the coming months and so on, to get in line with bigger moves to, by when to get into the stock market and when to get out, right? We'll be using this information, it's not just in hindsight. We'll be using this as we go along. So there is, remember when I told you guys about breakaway gaps, right? So this is just something else that I'll just throw in right now. So right here, we had price trade, right? And fill this gap, like go way over it. Then we had price here, failed to fill this gap. That's a cracking correlation as well, right? Afterwards, what do we see? We see a formation of a breakaway gap. Then we have a favorable gap that is almost perfectly balanced very quickly, then price runs away. Whereas here, it was not balanced. Why? This gap was filled, way overfilled. This one wasn't. You see that? Of course you do. Just like, tip. So again, this is why the forex market is important to, cross analysis, because it gives you insight like this. Whereas you can't use the yearly cycle to get insight by just looking at these three markets. If you're a stock trader, just throwing this in there as well. If you're a stock trader, you're going to need to be looking at this, right? Why? Because you're going to be looking at this. This is why I always start with the US dollar, because it's important, right? Everything revolves around the US dollar for now, right? Everything revolves around it. There's nothing that doesn't revolve around the US dollar. Right now, it is the world currency for now. Emphasis in for now. Until, God forbid something bad happens and, the whole system crashes over there or something. Don't know. But anyways, yes, this is what I want to share tonight, and I hope that you guys found value in this. This has a lot of gems, and hopefully it clears up some, things that you are having problems with. I specifically came here, tonight to speak about these things because of the questions, that I've been seeing in the community chat. I'm seeing your questions. I'm answering most of them right now, and I'll be answering them again this way. It's better to come in a video, and speak for, 20 minutes, 30 minutes or so, and answer the questions here where everyone can glean from, me speaking about that. It's better than typing out stuff that you probably won't even read or you just glance at. You won't even take notes of it, but it's better to, hear me just talking. Engraves it in your mind better as well. So I hope that you guys have a wonderful night. It's 11:10 p.m. right now, and I'm not going to sleep. Probably going to be back testing. I got a lot of stuff that I'm testing out. Trying to build an algorithm, which is killing me right now. So difficult. But with time, it'll be done. Could be 5 years, 3 years from now, don't care. Have a wonderful night.